Okay, hello everyone. My name is Stacy Snyder, and I'm the president of the Howard County Alumni Network, an extension of the University of Maryland Alumni Association. We are excited that you were able to join us today for our State of Real Estate and Mortgage webinar. This event is part of the Alumni Association's virtual program event series, which we hope to provide thought-provoking and valuable content that help alumni like you achieve your personal and professional goals. Please keep a close eye on your emails as we continue to create programming to keep you connected and engaged. Okay, we have a lot of information to cover today, and we want you to get the most out of this webinar. We have about 40 minutes of content to share with you, and then we will answer any questions that were not covered. So go ahead and type them into the chat, and Kara will ask them when we finished. A little bit about our presenters. Again, my name is Stacy Snyder, and I am with First National Bank. I've been in the mortgage industry for over 30 years and in operations and production roles, and currently enjoy being a mortgage loan consultant specializing in new construction, renovation, and jumbo financing. My co-presenter is Rachel Carr, also a member of the Howard County Network Board. Rachel?
Hi, I'm Rachel Carr. I'm with Rachel Carr Properties. I am a residential real estate agent. I work anywhere from Montgomery to Baltimore and everything in between. Listing agent and a buyer agent in the area. Anne Arundel, Howard, even further out, Frederick. So I'm really happy you guys are here. I even recognize some names. Hi, Ankit. Hi, Martin. It's so good to see you guys here. And let's go ahead and get started.
Okay, we put together this presentation for you because we love what we do and we love the University of Maryland. We want to help our fellow Terps with the knowledge that we have. This is for your information, not a sales pitch. So if after tonight you have any questions that we can help you with, even if you already have a realtor and or lender, please do not hesitate to contact either one of us. Now I'm going to turn it over to Rachel for our first topic, the current state of the real estate market.
All right, well, I get asked a lot about the current state of the real estate market, and the current state of the real estate market really is changing week by week by week. The only thing that hasn't changed from before COVID, during COVID, and now is that it is still a seller's market. It continues to be a seller's market. So the reason being, we have very low inventory. At the peak of COVID, we had very, very low inventory. As you can imagine, people were not putting their house up for sale. But even then, we still had transactions moving. We still had buyers. And as June approached and currently, things are opening up. More sellers are coming online. Still low inventory, but more are coming online. The reason being that things are still in a seller's market. We've got buyers being so excited. We've got great low interest rates at historic lows. Stacy's going to talk more about that. Between the number of buyers coming in, looking out for those interest rates, and the low amount of inventory, it's a seller's market, but it's a great time to buy with those interest rates.
In the mortgage market, sorry.
Yeah. Sorry, I also wanted to say people are moving also right now. Because of COVID, people are moving. They're finding that they need office space that they didn't think they needed before. They're looking at things like pools. They're looking at things like moving out from areas that are very populated into more rural areas, especially now that a lot of employers are not having them come into work, and that may be for the foreseeable future. We also have people looking at second homes. So there are all these reasons where buyers are coming online right now. Sorry about that, Stacy.
So in the mortgage area, rates are expected to stay low for at least the next year. That being said, mortgage companies are overwhelmed with business right now. Purchase transactions can be done in 30 days, but you need to be ready with all of your financial documentation and provide anything requested immediately. Refinances are taking longer, 30, 60 to 120 days, so be prepared to update your documentation along the way. All parts of the industry, including appraisers, title companies, and insurance companies, are very busy and have had to adapt to working from home and other restrictions. Please remember to be patient with these folks. They are under a lot of pressure. So our next topic, what are the effects of COVID-19?
So effects of COVID-19 are very logistical. So during the height of the market, which was the end of March, beginning of April, most everything went virtual. So if you were doing showings, it was virtual. If you're doing open houses or going to open houses, they actually were virtual. Even, believe it or not, inspections and settlements were somewhat virtual. So very few people actually got showings, although real estate is essential and has been essential. Those that did get in to a showing were very, very highly vetted. So they were asked to provide pre-qualification letters to make sure they were serious, so that anyone going into especially an occupied home, we knew that they had strong resources and a lender behind them. Also, when you were doing the showings and going in person at that time, things were, all precautions were taken, sanitization, people were wearing gloves, people were wearing masks. They were asked to touch as limited amounts of surfaces as possible. In fact, sellers were often being asked to keep doors open, keep closets open, keep pantries open and cabinets, just so that buyers didn't have to touch anything. So that was going on during the height of the market. And of course, the only people that were asked to be in, and that is still the case to some extent, are really title holders. So they're really just asking for people who will be on title. So no grandparents and no kids, and that's all for safety reasons. So really, as you can expect, things have been opening up quite a bit since the height of the market.
In the mortgage industry, we have the CARES Act. This is the act that allows any federally backed loan to temporarily go into forbearance. So if you have a loan that is FHA, VA, Fannie Mae, or Freddie Mac, not a jumbo, you can request to stop making your mortgage payments without reason. It will not affect your credit score, but it will be reported on your credit report. Do not do this if you plan on buying or refinancing in the next 4 months. The reason is that lenders need to see that you have made 3 payments on time after your forbearance period has ended. And this is not free money. You will still need to make the payments at the end of your loan. If you have a jumbo loan that's still available, but you need to check with your bank to determine their forbearance policy. The other effects that COVID has had in the mortgage industry are the lending restrictions. For example, we're going to be checking employment the day before closing to make sure you're still employed. With self-employed borrowers, we're asking for a year-to-date profit and loss through the end of the month previous to closing, and proof that you've had money coming into your business bank account within the last 10 days prior to closing. So that means any accounts receivable you have, you want to make sure you're depositing it right before settlement. Okay, Rachel, let's hear about preparation for sellers and buyers.
Sure. So I'm going to start first with sellers. So if you're a seller right now, the first and primary thing you want to do is get an agent. So you want to get an agent that you like, an agent you trust. The best way to go about that is to ask people you know who they've used, who's worked out for them. If you know agents already, that's great. While it's important to have an agent who knows what they're doing, it's also just as important for you to be comfortable with your agent, to like them, to trust them. You're going to be spending a lot of time selling your house. They're going to be giving you pointers on what to do to your house. It needs to be someone you want to spend time with. So first and foremost, the other things to keep in mind if you are a seller, don't hesitate. We are in a seller's market. We don't know how long that's going to last. Now is the time to sell. And that changes. Your agent can give you more up-to-date information when the time comes. But if you're thinking right now to sell, don't hesitate. As far as selling your retail property, assuming you're selling retail, you need to declutter. You need to make sure it looks fresh. You need to make sure it looks clean. So when a buyer walks through your home to look at buying it, they want to think about how they can just walk right in and feel very comfortable. And if it's messy, if it's cluttered, it's going to feel uncomfortable. The perception is going to impact potentially what they offer you. So these are all things to think about. It's also things your agent is going to go over with you. They're going to take a look at your home and give you specific information. There's also staging, which is not always necessary. That's something you're going to talk to your agent about and see whether that would be worthwhile for you. As far as what's in your home, I suggest you remove anything religious, you remove anything political. If you want to keep some personal items up, this isn't HGTV, you're welcome to keep some items up. I would just make sure it looks nice and you're not taking up a whole lot of space on your walls. As far as pricing your home, for your listing, your agent is going to discuss with you comps, and you want to make sure you price it properly. Regardless of the fact that we're in a seller's market, buyers still have limitations on how much they're going to spend on a property. So try not to be too greedy, don't ask for too much, and by the same token, do not go and undervalue your property. Really, the importance of an agent is they're going to tell you where that pain point is to give you the best possibility for multiple offers. And in the current market, very possible. As far as buyers go, it's the same first step. Getting a great buyer's agent. Again, you're going to be spending a lot of time with your buyer's agent. She's going to be walking you through properties. She's going to be finding information about those properties. You guys are going to, be very much entrenched in the whole process up through settlement. So make sure you love your agent. Find a great one for yourself. You also want to get a great lender. The reason you need to get a great lender right from the very start, especially now, is you need that pre-qualification letter to get in the door nowadays of a showing. They want to know that you're serious. Your lender is also going to be able to tell you, going to need to be available. So for instance, when you're putting in an offer on a property, a seller and a listing agent is going to want to hear from that lender to make sure you can perform at the end. The two things that are most important to a seller is their net, what they're going to make at the end, and that you can actually perform. So your lender being able and available to speak to that listing agent and tell them how great you are and what a great job you have and how likely you are to perform could really make the difference in this market between getting an offer accepted and not. So having them available. The other thing as a buyer right now, I say this kind of lightheartedly, but try not to fall in love with properties. It is a seller's market. There is a likelihood that you won't get the first property you have. Be realistic. You love the property. Understand that it may take 2 or 3 times before your offer is accepted. Even with the most aggressive offer you can provide, it's just a challenging market. But again, you're getting those great, amazing interest rates. So they go hand in hand right now. And be flexible. So, you may find that the kitchen isn't exactly what you're looking for. There are ways and there are actually avenues in your loans, and Stacey's going to discuss that later, that might give you an opportunity to change that kitchen after the fact. So there is limited inventory. We're going to get you your dream home. You just have to keep in mind that you can always make the changes you want to make and make it even better. So that's where we're at.
For financing, you do want to start with the pre-qualification, especially for self-employed borrowers. You want to make sure what your qualification point is. How high can you go? With your credit, you want to find out what your credit score is. The credit score that you receive from your credit card company is going to be different than what mortgage lending credit reports have. So you want to take care of that. Also, erroneous items show up on your credit report that you may not be aware of, and this is a good time to get those sorted out right in the beginning. Do not close any of your credit cards. If you're paying things off, don't close the account because that will hurt your credit score. Your funds for closing, you want to get them into liquid form as soon as possible, park them in an account and leave them there. If you start moving money around, the lender's going to have to document everything and it could delay things. So lastly, have your documentation ready to go because you're going to need to move quickly once you have that contract in place.
Absolutely.
So our next topic, what are your suggestions, Rachel, for buying in the next 3 to 5 years and for first-time home buyers?
Okay, so we did get a lot of questions about first-time home buyers and people who are looking in the future to get their first house. So for 3 to 5 years out, it's really You know, I hate to be a broken record, but it really is about the agent. Form that relationship with your agent now, because an agent will send you information on a consistent basis regarding the market. It's really important. This is, you know, this is the biggest purchase you're going to make probably in your entire life, is your home or your homes. So it's really important that you have someone who's explaining to you the market, that when the time comes, you understand the market, the ups, the downs, and when you are ready to move, that you understand where the market is currently, so you're ready to jump in. So get that relationship with a good real estate agent. The other thing, and I think we pointed this out a little bit, save money. Make sure you have that money. You've got 3 to 5 years, so make sure you're saving some money, that you're keeping your credit in good shape. It is very important. You have good credit, it's going to provide better loan terms, and you're going to have much more buying power with that. And actually, it can help you win offers. So sellers like to see that the buyer is in great shape financially. They don't get all the information, but they should get enough that they're comfortable and they're confident saying yes to your offer. So for 3 to 5 years, that's what I would say. For first-time home buyers, agent. You guys are new at this. You've never done it before. Find an agent who you want to work with, who you want to spend time with, who's going to tell you all the information, who's going to educate you, who has time for you. Not all agents have time. They're busy. They hopefully have a good team behind them if they are busy. Someone on their team that can help you and make sure that you are taking a priority as a first-time home buyer, to understand what the process is and make you feel comfortable and as least stressed as you can. It's a trying process, but it's a great process, and the end result is amazing with your own home. So keep that in mind. As far as a lender for a first-time home buyer, it is really important you talk to your lender. You need to know what you qualify for. You know, as an agent, the worst thing I can do is show my buyer a property she or he can't afford. So we want to make sure that lender you already have gotten pre-qualified. So there's no ifs, ands, or buts, and you know where you stand and what you can afford.
Okay. Financing for first-time home buyers. So there are a lot of programs out there. There are federal programs for down payment assistance, state and county programs. There are low-income programs. And keep in mind, in some cases, low income could be $80,000 a year. There are some zip codes that have down payment assistance with no income limit. There are newly formed HEROES down payment assistance programs for healthcare workers and teachers, police, and firemen. There are physicians programs for doctors, dentists, veterinarians that are 100% financing. So the most important thing there is to do your research, ask different lenders. They have sources, or they have access to different sources for your down payment assistance. There are programs, the government, for example, FHA lending is 3.5% down payment through Department of HUD. Fannie Mae and Freddie Mac have 3% down programs. And then that down payment can come from one of these assistance programs. So if you're tight on funds, that's the research you need to do. You also want to work on building up your credit score. As Rachel mentioned, better credit means better rates. The most important thing you can do there is open some credit cards. You don't need to use them and pay interest on them. You can pay them off monthly. You only need to spend $20 a month, pay it off, no fees, and you're building credit. It's the best way to get your credit score up. The next item is qualifying. In addition to you feeling comfortable with the new mortgage payment, you need to make sure that you're eligible for that mortgage payment based on the income calculation that the lender is going to do. So a simple math equation is to check your debt to income ratio. After the crash of 2008, the government put very specific guidelines in place that are part of something called Appendix Q. Basically, what that means is that your new housing payment plus any monthly debt, for example, car payments or your minimum monthly credit card payment, divided by your gross monthly income should not exceed 43%. If you're paid on an hourly income basis, or you have bonus or overtime income, or self-employed, you're going to need to use a 2-year average for that part of the income. That means that if you've been making a lot of money the last couple of months, but it's not consistent from the last 2 years, they're not going to be able to use the most recent income as the number. If your income is declining, that will be a factor as well. This is all part of the benefit of working with a lender early in the process to make sure that when you find your first home and you're ready to place that offer, you're ready and able to get financing. Okay, next topic is the forecast for real estate.
That's great. Look, what she just said was really important for really anyone, whether you're a first-time home buyer or someone who's already purchased two homes. All great information. As far as our forecast, gosh, I get asked this more than anything else, and I wish I had a crystal ball. I don't. I do have historical information. We're in uncharted waters, but there is historical information. So historically, since 1980, the past 5 recessions, 3 of the 5 home values have actually increased. So one of those where they decreased, of course, was the Great Recession of 2008. So I'm going to talk a little bit about why right now is different than 2008. So in 2008, that crash was basically started because the banks were extending credit to people who could not afford it. So they were over leveraged. So because of that, housing prices rose very, very quickly. Basically, people were not able to afford their mortgage, and so the housing crashed. So right now, we don't have that. Banks have not over leveraged. Stacy just discussed with you how regulations have been put in effect, systems have been put into effect that make sure that doesn't happen anymore. So, and it hasn't been. The other thing is that has kept our housing costs stable. Now, I know most people look at this area and say it's very expensive, but really in relationship to where it should be, it's been stable. And that's because the banks are giving money out properly to the people that are credit worthy and able to afford it. The other thing is that people now actually have equity in their homes where they didn't in 2008. So they are able to potentially tap into that equity during these difficult times. At worst, they can sell their home and still make money. They're not in a position where they have to, foreclose or short sale like they were in 2008. So keep that in mind. If everyone is waiting for the housing market to decline to get a great deal, I can't say that's not possible. We are in uncharted waters, but historically speaking, that's not likely. It's much, it's considering where banks are today, where people are today with the equity in their homes, there is a good possibility that homes will continue to rise. The one thing we do know is right now we have excellent interest rates, and just it's a unprecedented, and we do not know how long that will last. So, your guess is as good as mine. And Stacy, what do you think about that?
Well, we've had every indication that rates are going to stay low for at least the next year. So I'm not sure whether that's just the government purchasing bonds to try and keep the rates low, or whether that's the industry. We know housing is up and it's positive.
Yeah, great. So you all provided questions ahead of time regarding new construction, rental properties, and refinancing. And so Stacy's going to speak to that. So what do you...
Okay, there are 2 types of new construction homes. One is buying on spec, which means the builder builds the home either with your selections included or not, which is likely in a new home subdivision. And then you go to settlement for the purchase when the home is complete. The other type of new construction is to build on a lot you already own or purchase as part of the construction loan. So you have title of the land in your name prior to construction beginning. Typically, this way is used for custom homes, But often families own land and they want to parcel off a piece for a family member to build. And that's when a construction loan makes sense. In the first case, you're approved for the loan twice. Once as soon as you sign the purchase agreement, and again when the home is almost finished to make sure you still qualify and the file has all the current information. For a construction loan, you go to settlement prior to the house being built, and the builder receives draws during the process. In this scenario, you can customize the home because there is no risk to the builder that you won't be able to complete the purchase at the end since you already own it. So advantages to both ways. Another form of a construction loan is a renovation loan. As Rachel explained, this is one way to be flexible to buy a home that maybe is in the perfect location, perfect school district, but the kitchen is outdated, you want to add a deck, an extra room, finish the basement. It's a way to include these costs in the new loan. These loans have the same requirements as a purchase transaction, only that you are basing the loan amount on the finished home after renovations instead of just the purchase price of the house. Definitely consider this option as you are looking at resale homes if you are not finding the perfect place right out of the gate. There are several different kinds of renovation loans. Again, you want to talk to a couple of different lenders, mortgage companies, banks. They all have access to different programs, so it doesn't hurt to ask around. Rental property financing. Again, really no difference in the process as purchasing an owner-occupied property, one that you're going to move into. The rate may be a little bit higher and the qualifying a little bit more stringent, but you can buy an investment home for as little as 10% down. It is widely believed that investment properties need more money down, but that is not necessarily the case. What's important is to the lender is whether you have experience as a landlord or not. If you have not owned any rental properties before, as evidenced by your recent tax returns, then the guidelines are going to be a little bit different in terms of qualifying than if you have experience as a landlord. Okay, refinancing. That is huge right now. As I mentioned before, the mortgage industry is overwhelmed with business because the rates are so low. Shopping for the best rate will be difficult unless you are prepared to apply online and have your credit pulled. Multiple credit pulls within a 30-day period will not affect your credit report more than one pull, so don't worry about that. It doesn't hurt to shop around. When you're deciding on refinancing, typically you want to break even on your closing cost expense in 2 years or less. That means that the amount of the closing costs to refinance divided by the savings in your monthly payment should be less than 25. Otherwise, it may not be worth doing. And again, remember to be patient. It's going to be a few months before you start making that new lower payment.
Yep, that's all such great information. Kara, I think we're ready if you have some questions in the chat.
We do.
We haven't seen them, so.
Yeah, we do. And I'm hoping that I paid enough attention that there aren't any repeats, but you can call me out if there are. So Tom asked, he said, I understand that buyers are including a coronavirus addendum with their offer to buy to address delays leading to settlement. Is this typical, and what should a seller look out for?
Well, so it's not just buyers, sellers are also, it's really for both, it's for both parties. So the new COVID-19 addendum was actually put out. Usually they're using the one that was put out by MAR, which is our Maryland Association of Realtors. If they're doing one beyond the MAR, I don't know why they would, because MAR has come out with one that's very comprehensive. It effectively helps the seller and the buyer make sure that if something were to happen, for instance, one of the people within the loan or one of the sellers were to come down with COVID, that there would be extensions that would already be in place. So, and vice versa. So for the seller, if something were to happen to a buyer, you know, settlements still have to take place to some extent, but together with the settlement officer. It's not exclusive. It can't be exclusively online pretty much anymore. I mean, some changes are being made, but settlement officers really need you in person. So if someone comes down and they're sick, extensions need to be made. It's really basically for everyone's assurance that, that things are moving forward, that people are interested in continuing and progressing to the point of settlement, and to keep everything on the up and up. Now, you don't have to sign it, and it doesn't have to be in every offer. That really is something that your real estate agent and you would discuss as the lister, as the seller, or as the buyer, whether it's in your best interest.
Thank you.
Sure.
I got an anonymous question. So are you seeing an artificial increase in home prices currently because it is such a seller's market?
I don't know that I'd say artificial. We definitely have, there are some homes that, I'm not kidding, 15 and 16 offers. But I will say this, appraisers are still there. So even though they're having 15 and 16 offers, it still needs to appraise. Or people need to come up with that extra money, which sometimes isn't the case. It's very hard to say. It could get worse from here. It could get more expensive from here. It's very challenging for me to answer that question. Appraisers, your agent, making sure you make good decisions as far as who you're choosing. If you're choosing an offer that's way out of line with market, then you're going to have trouble getting that to appraise. And that's where your real estate agent comes in to say, wait a second, well, that's nice that they want to offer 30 over, but that won't appraise. We're going to have problems down the road. And to keep things in check. Is it possible? We do have very low inventory, but honestly, we've had low inventory. It's been a bull market in real estate for a while. It's just right now a blip. So, and it's just continued from before. I hope that answers the question.
Benjamin asks, is it okay to use more than one agent while looking? What are the caveats? What caveats?
So when you're looking at a property, you're supposed to, by law, have an agent should have sat down with you and either gotten you to sign an exclusive buyer agency agreement, or there's another agreement that effectively says, you don't want me to be exclusive to you, but then I'm really working for the seller. So it's in your best interest to have an exclusive buyer agency agreement with your realtor, so they are working as your fiduciary. It's like going into a courtroom without a lawyer. You wouldn't choose to do that. You shouldn't go into a real estate transaction without your real estate agent behind you. So can you? You could conceivably, use them and not be exclusive to them, but I definitely would not suggest it, especially right now, but certainly anytime. You just, as a buyer, you need to make sure there's someone on your side.
Kind of sounds like dating or something.
It's right, but but there's some legality to it as well, and this is contract law. I mean, we are not lawyers, but we deal with a contract. Right. And if you don't have the right resources behind you, the right team behind you, if I don't know the answers to my question, I have a team behind me that I can ask questions to. If there are legal questions, I have a lawyer behind me that I can ask legal questions to. So if you go in without an exclusive agency agreement, I am working for the seller. And that's just the reality of it. I can tell the seller your motives. I can tell them at that point how much you're willing to pay. If you're not my exclusive, if I'm not under agency with you, then technically, actually by law, I need to tell the seller your motivations. I need to tell them what you're willing to pay, because I'm working for the seller.
Yeah, that's good to know.
Yeah.
Now, Matthew, and this is particularly of interest to me because I can probably only envision myself buying a condo at this point, but I wouldn't count anything out. But any general advice, thoughts on purchasing condos and co-ops versus more traditional options, detached townhomes, especially regarding the ability to keep them long-term as investments when you outgrow them?
So that's a lot. What I will say is that townhomes can be condos. So just because it's a townhome does not mean it's not a condominium. A condominium is a type of ownership. It just happens to more often be in apartment styles, but very often it can be as well in something that looks like a townhome that's 3 floors. 2, 3 floors. So keep that in mind. Condominium really means that you have a mutual ownership. It usually means that there's not usually, should be always, there's a master insurance policy. So essentially, you know, if the roof goes on yours and it goes on the rest, the insurance will cover that. The exterior is usually covered by that master insurance policy. Grounds are usually covered by that by the lawn maintenance as part of the condo association. So condo association is a great thing, especially if you don't want to care about the exterior. Now, the thing about it is they can be very expensive. I've seen condos that can be, you know, $800, I'm not kidding, a month. So for a condo association, now $800 a month, and Stacy can chime in here. The way I understand it, you know, for every $500 of fees, of condo fees, it's effectively like $100,000 worth of mortgage. So when a lender is looking at your at whether you can, whether they will give you that loan, they're going to take into account the fact that those fees are $800 a month, and they're going to consider that as if it was $150,000 worth of mortgage, because they're expecting you to be able to pay that on a monthly basis. It's never going to end with a condo. So it will only get more expensive, more than likely, in some, you know, over time. So that's the thing about a condo. That also makes it, look, condos can be challenging to sell because of that. But the reality is some people can't afford anything but a condo. So it's kind of a double-edged sword. If you can, you know, and again, you get the beauty of having it maintained for you. So you have to just weigh the cost and the benefit. And really that's where a lender comes in, because if you've got if you've got a $140,000 condo with a $500 a month condo fee, that's essentially like a $250,000 mortgage payment. So you could go ahead and buy a $200,000 townhouse somewhere and have a $100 HOA fee, and it would probably equate pretty similar. So you just have to take that into account. That's where a lender comes in. Now, Stacy, do you have anything to say about that?
Well, you bring up a good point about the condo fee. So the condo fee is going to be counted in your debt to income ratio. When you're thinking about buying a condo, knowing that you're going to keep it long term, one of the things that you need to check out is, does the condo have any rules about how many investment units they have in the project? Because financing is not available through regular means, Fannie Mae, Freddie Mac, when the investor ratio exceeds a certain amount. So those are things that the condo association wants to make sure that they're maintaining, because they don't want to be perceived negatively when people cannot use standard mortgage products to buy in their community. So you may not be able to keep it as a rental after you move out. Something to consider. As far as qualifying goes, it really is a matter of, is there value in the condo association fee? Obviously, a lot of condos are in the location where you want to be, so you don't have a choice. You just need to make sure that you're qualified for the total payment.
Correct. Just because it's $130,000 and you are qualified to $150,000, you really need to talk to your lender, because more than likely you're not going to be qualified for $130,000 with a condo fee on top of it. So you just need to double check. Okay.
Any others, Sarah?
Informative, yes. This one I think is more for Stacy. What is the difference between using a lender from one bank, and then in parentheses, or checking in with different banks versus a general mortgage broker, and then advantage versus disadvantage of each?
Okay, so back in the day, 2008 and previous, there used to be things called mortgage brokers, which for all intents and purposes went away after the crash, because these brokers basically shopped your mortgage to lenders, and then those lenders actually closed the loan in their name, and then the broker received a fee for that service. That kind of doesn't exist anymore. So now you just have mortgage lenders who sell all of their loans on the secondary market to the national lenders such as Chase or Bank of America or, you know, Fannie Mae directly. Okay, so mortgage lenders use funds from a warehouse line, and then they sell the loan, the warehouse line is paid off, and it's a constant rotation. Banks, on the other hand, have portfolio products. They can sell directly to Fannie and Freddie and government loans and retain the servicing, so you're always making your payment to the bank. They also have portfolio products that are unique to them. A lot of the construction or renovation loans are bank products. So it goes with doing your research, doing your shopping. Definitely, if you are purchasing and you have some sort of unique scenarios in mind, you want to talk to lenders and bankers, depending upon what you're trying to do. You may find that a banker has a program that you hadn't even thought of. So that would be the difference between the two.
If I can add to, lenders can have different products. Your real estate agent might have some lenders they know that have specialty products. You know, for a first-time home buyer, it's pretty cut and dry. But as you get more expensive construction loans, jumbo loans, specialty products are necessary. So I know that Stacy does a lot of those. And there are other banks. Often your real estate agent can kind of lead you a good direction, but they have all sorts of programs I haven't even thought of. I learn about them all the time, every day from my lenders.
Rachel, you bring up a good point, and I just want to leave with this last comment on lenders. As I said, lenders are very busy right now. Loan officers are busy. But if your real estate agent has a relationship with a lender and she refers you to that lender is going to do right by you, because the last thing that they want to do is hurt the relationship with the realtor. So if you're finding that a lender is not answering your calls or your questions, ask the realtor who they could suggest, because that person is going to make you a priority.
Well, and beyond that, right now, I'm sorry, I keep interjecting, but I have to say it, we are in a seller's market. If your real estate agent, look, your real estate agent should give you a few lenders that they've used, because we don't want to steer you to one or the other, but we have lenders that we know have worked for us. In this market, it is imperative that there is a relationship. You know, it's all about relationships. It's about your relationship with your realtor. It's about your realtor's relationship to the co-op realtor. So if you're the other agent on the other side, you know, being able to discuss what's going on and try to come up with, you know, what works, what doesn't work. And having a good relationship with them. It's also about the relationship between the lender and everyone else. So as an agent, when I have a great relationship with the lender, it makes everything go more smoothly. Relationship with my title, that's why the team behind the agent is so important. So I have title attorneys that I've worked with, and if there's ever an issue, I know I can count on them. I know I can call them. I know they're available. And right now in a seller's market, there is nothing more important than the availability of everyone and the fact that everyone works together as a team. Period.
Period.
Yep.
This is just and this is kind of the last question. I put out a last call, but this is more for me. So Stacy, what are the best like credit reporting websites that you think are valuable to people as far as like checking and, you know, finding out what your score is and how to fix things if they need to fix it? And then what is a good credit score, which you mentioned when you're when you're talking to a lender?
Well, as far as how to find out about your credit score, that's a challenge, because you're just not going to have access to the same
algorithm.
The same way that a mortgage credit report, there's a certain algorithm that is used for that. But what you can do is, you know, a lot of credit cards, you have access, you know, Credit Karma, those kind of websites. But what you want to be looking at, is there anything erroneous on there that isn't yours? Because you have the ability to fix that. You have the ability to dispute it. I had an incident recently where a customer I had worked with previously had a great credit score. He said, okay, I'd like to refinance. I pulled his credit report and it was much lower. And I said, well, there's this collection on here. Did you know about this? And he said, no, I don't use that company at all. Never have. I gave him the contact information for the 3 bureaus. He had no idea it was on his credit report. He contacted all 3 bureaus, and within 2 days, his credit score went up 70 points. I was amazed. And it just changed his whole access to interest rates, because he knew what was on his credit report and he knew what shouldn't be on his credit report, and he dealt with it. As far as interest rates go, different credit scores are have effects on different programs. For example, an FHA program allows a much lower credit score without an effect to rate than a Fannie Mae program, which also has a different effect to rate than a jumbo program. Jumbo programs, because the loan amounts are higher, tend to want better credit scores, and the interest rate changes for each credit bucket are much narrower. So whereas, for example, let's say Fannie Mae, you can go down to a 680, a jumbo may not go below 700, and as somebody with a 700 credit score is not going to get a very good jumbo rate. So it is relative, is what I'm trying to say. Conversely, if you have a really good credit score, you may not want to go with a government program because you are eligible for a much better program based on your credit score. And I know that didn't answer it directly, but that's the situation.
I'm going to go on top of that, because there was some stuff that came out of that it's important for people to understand from a real estate, from a purchasing perspective, which is that we've been in a seller's market, as I've said, for a very long time. And there's no idea that that's going to change. So keep in mind that there's a strategy. So your real estate agent is you're potentially up against multiple offers. So your real estate agent is trying to strategize what, they're going to call up the other agent. If they're a good buyer's agent, they're going to call up the listing agent. They're going to find out what is important to the seller, what they can do to make sure to bolster your offer, to make sure your offer is, going to rise to the top. One of the things that impacts strategy-wise is the type of loan. So imagine, the difference between an FHA. We know that FHA and government-backed loans potentially allow for lower credit scores. Lower credit scores suggest a conventional loan. Conversely, people typically can get a conventional loan when they have higher credit scores. So if you consider yourself as a seller, you're going to notice that one is an FHA and one is conventional, and you may make some assumptions from that. And it may impact whether you choose that offer or not. By the same token, there are ways to alleviate that. So while maybe you are going to stick with the FHA, there may be something else that puts your offer ahead of the rest. So your agent needs to understand that. You need to understand that. You all need to work as a team with your lender to make sure that you're in the best position to win an offer. Really under any circumstances, but certainly now. The other thing I wanted to mention, and she brought up, which was so important, I get asked this more times than I expect. People have asked me a number of times if they want to, I tell them, the first thing you need to do is talk to a lender. There's really not much we can do until we find out what you are capable of, what you can purchase. And so their first question to me, I'm serious, and it happens a lot, and Stacey, I've never mentioned this to you, but they'll ask me, well, are they going to charge me for that? I'm not kidding. You should never be charged for a lender. They are going to give you a loan. They're going to make money off your loan. That is how they get paid. So a lender should not be charging you to give you a pre-qualification. They get charged just as a realtor does at settlement. So, and beyond, because you're paying on that loan for as long as you're paying on it. The other thing is I get asked about credit credit agencies to fix people's credit. And my goodness, you know, certainly there's a place for them. If your credit is really horrible, maybe there's a place for credit agencies that fix your credit. But generally speaking, 99% of the time, talk to one of the agents that I have a relationship with, and they are going to put you on the path to getting your credit score up. They are going to look, they're going to potentially pull your credit, they're going to look at it, and they're going to give you, this is what you need to do to pull your credit up. They know how to do it. Stacy knows how to do it. There's no reason to pay for a service like that. Stacy, am I right?
Yes. So I was thinking that maybe people ask you that because when you go to an apartment and apply, they charge for that. So,
Maybe.
but
Yep.
there is no fee to work with a lender. Also, something to keep in mind is that when you talk to a lender and they say, and they pull your credit and they say, I don't have any programs for you, or, you know, here are the programs I have, that does not mean that there isn't another lender for that has a program for you.
Absolutely.
Keep trying. And the reason I say that is because when lenders sell their loans to Fannie Mae and Freddie Mac, they sometimes have what they call overlays. And that is an additional guideline or restriction that gives the lender more of a comfort that they are willing to do your loan. But it's not necessarily the minimum requirement from Fannie Mae or Freddie Mac or FHA. So it could be that this lender has a much lower tolerance for the guidelines, and they have a lot of overlays. Ask other lenders. You definitely want to talk to more than one to make sure that your needs are being met.
And don't take no for an answer. I mean, at least go through a few different ones. Talk to an agent. Agents typically know lenders that might be more flexible, that have worked with people in different situations. So, you know, there are lots of avenues. If you're ready to buy a house, go for it.
It's a great way to end the program. Yeah, I think that's all of our questions, but thank you guys for presenting. I feel like for me, it was informative and it kind of,
I see one more question just came
one more
up.
question. Okay. Would you recommend?
Yes.
Yes.
So if you have an account with a bank, absolutely talk to them about doing a pre-qualification because you're their customer already. The best thing that bank can do is to what they call cross-selling, right? They want you to take advantage of all of their services. So if you have an account there, that is fantastic. They will have someone either in the branch or they have a loan officer that is assigned to your branch, and it is a great way to have a relationship on multiple levels with that bank.
I will say I have had some challenges with very large national banks, and the loan officer you're talking to is in South Florida, and we're in this market. And there is something to be said for having a lender who understands the DC, the Maryland market. We are a very unusual market. We're an expensive market. So keep that in mind. It's really important. There's a place for the big national online Quickens and even the national banks, but if it's really, you know, you want to be able to knock on someone's office door if there's an issue. That's what I found. And by the way, local can get you great rates as well. They should be able to get you very similar rates, if not better. So I love local lenders. Like Stacy.
Okay. Well, thank you so much for joining us this evening. If you have additional questions or need our help with anything, please reach out to Rachel or me at the Howard County Network email address, and we will get back to you as soon as we can. We hope to see you at the great events provided for alumni during Camp Diamondback next month.
Oh, yeah.
Have a safe and fun summer, everybody.
Thanks, guys. I really enjoyed it. You guys, go house hunting.
Go Terps!
Go Terps!